What happens to an overdrawn director's loan account on liquidation? Well, the answer is it's an asset of the company. The liquidator needs to deal with it. And that means that effectively the director will be called upon to repay the overdrawn director's loan account. Now, that's not the end of the story. It's not just simply a case of whatever the liquidator says that the director has to pay. That's never the case, because the liquidator does not have the authority like the court has. The liquidator is simply the office holder of the company. However, for most liquidations, what will have happened is that the director will have signed a document known as the Statement of Affairs, and in that document it's quite feasible that the overdrawn director's loan account will have been stated and declared. So if a director then wants to then roll it back and dispute that position, they can be in a little bit of a tricky position, given the fact that they've signed a document stating that is the position. But nevertheless, if there are errors in that document, then basically it's still open to the director to come forward and say, well, yes, there may be an error and we dispute the balance for whatever reason, but they are going to have to explain why before they're asked for the money, they signed a document saying X amount was owed, and then when somebody comes knocking, that they basically say, well, we don't owe this because there's an error. They're going to have to explain that in a credible way if they're going to dispute it. So there's a question of the dispute. The other aspect of it, of course, is what they can pay, because ultimately when you're called upon to make a payment in relation to anything, but obviously in relation to an overdrawn director's loan account from a liquidator, the ability to pay is going to be a relevant factor, and it's going to determine how much money may potentially be repaid. Questions, queries, concerns, give us a shout. We know Insolvency inside out.